Are you prepared to learn more about Tesla's continuous achievements? You're in luck, though, because tech analyst and investor Dave Lee discusses his thoughts on Tesla's most recent earnings report in this video, along with the reasons he thinks the business is only beginning to explore revolutionary new ideas. That will eventually add up to a ton of cash for us Tesla bulls. Tesla's Q4 performance exceeded analysts' and investors' expectations, despite competition from established automakers and other obstacles. So fasten your seatbelts and get ready to discover more about what makes Tesla a revolutionary company in the electric vehicle industry. Firstly, I would want to invite everyone who hasn't subscribed to World Street Games to do so. Remember to hit the like and notification buttons as well. Now let's get going. According to Dave Lee, Tesla is only beginning to innovate its way into becoming the most advanced company in the world. The investor was taken aback when he learned that his common shares of Tesla had surged in value by a factor of 100 in less than 8 years, as you are likely already aware if you regularly watch our channel. Dave Lee's YouTube channel has more than 1.14 million subscribers as of March 2023. Dave Lee is an independent tech analyst whose thoughts and insights are based on his in-depth industry expertise and research, yet opinions regarding the validity of his analysis may differ. Dave Lee claims that the intended Gigafactory in Mexico serves a different function than first believed. He thinks that neither the Model 3 nor the Model Y will be produced at the facility for the American or European markets. Rather, he contends that the factory is designed to serve a new market in Mexico, Central America, and South America that needs a car that is less expensive than the Model 3 and Y that are now on the market. He believes that this action combines new geographic directions with a new pricing point for Tesla. According to Lee, the new cars and the factory schedules will probably align throughout the next 18 to 24 months. Nevertheless, it doesn't appear plausible that the $25,000 car will only be available in Mexico, Central America, and South America after looking at technical discussions. Let's listen to one of Dave Lee's many unique perspectives and observations on this, shall we? Tesla produced some excellent results in the most recent quarter, despite the status of the economy. Several onlookers noticed that Tesla made a lot of noise at its most recent Master Plan 3 investor presentation. On the other hand, those who are acquainted with Tesla's approach recognize that the presentation was grounded in truth. Despite this, some people were uneasy and didn't understand the importance of the information given because they were probably only hoping to catch a peek of a cheap car. Nevertheless, significant subjects were covered, including the impending Cybertruck release, the company's attempts to increase production and lower prices, and the opening of a new Gigafactory in Mexico. Following the presentation, the share price initially dropped by 5.9%, but quickly increased. Since then, the stock has dropped below $195, which may present a purchasing opportunity for certain investors. All things considered, it seems sense to ignore the hype and focus intently on the facts, bearing in mind that the shares were acquired at a substantial discount to their present value. According to Lee, a company's revenue limitations directly affect Tesla's performance in the most recent quarter, which fell short of analysts' expectations. A stock's worth is determined by a company's capacity to generate profits. According to Credit Suisse, heightened government efforts to contain the pandemic and an increase in the number of cases recorded in China led to the closure of Tesla's Gigafactory in Shanghai on March 28th of last year. Despite the fact that the Shanghai Gigafactory, which produced over half of the company's vehicles last year, had to close for several weeks owing to electrical issues, Credit Suisse says they are still positive about Tesla, since it appears that the management is in control. While there may be some impact from the Gigafactory's idle state, 1.45 million Tesla units should be delivered this year, with current quarter deliveries estimated to be comparable to those of the first 3 months. According to Lee, Tesla needs to deliver more cars than investors anticipate and generate more profits each quarter in order to continue turning a profit. Dave Lee is not alone in believing that Tesla will improve by 2030. In addition to Credit Suisse, Morn Capital has provided us with their comments. Roy Bahat, the former CEO of Bloomberg Beta, and Jeff Lawson, the CEO of Twilio, co-founded this venture capital business. The company invests in businesses that employ tech. In its investor letter for the first quarter of 2022, Morn Capital stated that it believes Tesla shares would yield a return on investment of at least 10 times by 2030. Given that its largest investment has been doing well lately, the company decided to expand its stake in Tesla in the first quarter, with the expectation that the company's stock will outperform the S&P 500 during that period. Gary Black, a Tesla investor, has also made some intriguing forecasts on the company's future. For instance, he believes that its market value ought to be $4 trillion. If every one of the 1.4 billion shares of Tesla were in circulation, the company's market capitalization would be very nearly $4 trillion. Black projects that by 2030, electric vehicles would account for 60% of all automobiles worldwide, meaning that the company's current valuation is $1.09 trillion. By the end of the decade, if every share makes $100, Tesla will have produced roughly 10 million cars annually, with 85 million light vehicles sold globally. Black, though, believes that things can worsen before they get better. Tesla's stock price fluctuated a lot at the beginning of this year, going up and down several times. The price of Tesla stock has fluctuated since it hit a low of $108 in early January for a number of factors, including market movements, investor sentiment, corporate announcements, and international economic circumstances. When the stock price gets close to or crosses the $1,000 mark, it is thought to be a major psychological level for the stock and may cause buying or selling activity. The price volatility of the stock might also result from investors selling their shares or taking profits when the price hits this level. It is noteworthy that stock prices are subject to regular fluctuations and can be unpredictable, making it challenging to pinpoint a single cause for Tesla's persistent price volatility. But it's reasonable to infer that Elon Musk's actions on Twitter may have played a significant role in this. The recent declines in the stock prices of Apple and Microsoft indicate that investors are losing interest in high-tech businesses. China has expressed concern over the increasing frequency of shutdowns that appear to be unrelated to one another. However, Cathie Wood seemed uninterested in any of this. According to recent estimates from her company, ARK Invest, a share of Tesla stock would be worth $1,533 by 2026. The business had previously projected that by 2025, each share would be worth $1,000. According to a previous post, the bear scenario anticipates the price at $966 by 2026, which is still around 6 times the current price, while the bull case predicts a price of $1,667. Dave Lee has repeatedly expressed his intention to hold this stock for the long term and his belief that Tesla will experience significant growth by 2030. Lee's belief appears to be supported by Kelley Blue Book. Kelley Blue Book is an automobile research and valuation organization that offers data on both new and used vehicles. Regarding Tesla, Kelley Blue Book has published a number of evaluations and rankings of the company's automobiles, including the Model S and Model 3, which have garnered praise for their functionality, style, and technology. Tesla held the top spot in the U.S. electric vehicle market from January to March 2022. Tesla's accounted for 75% of all electric vehicle sales in the first quarter of 2022. In 2017, Tesla Model 3s and Model Ys accounted for 68% of all electric vehicles sold in the U.S. Elon Musk's company is prepared to challenge for the top spot in 2023, when it intends to launch new car lines that will include the eagerly anticipated Cybertruck, Roadster, and semi-cars. Similar to the factories in Shanghai and Berlin before it, the new Gigafactory in Mexico will give investors plenty of material for speculation. What do you think the stock of Tesla will be valued in 2030? Please comment. Remember to thumbs up this video and subscribe to this channel as well. Thank you for viewing, and we hope to see you in the upcoming video.